My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. People want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you and try to explain what the heck is going on. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Now we're talking. You give this market enough fuel in the form of better than expected earnings from real companies, and you get a terrific rally like we had today, with the Dow gaining 153 points, the S&P climbing 0.41%, the NASDAQ falling 0.770. Nice move, nice. For a while now, I've been telling you that when we finally get to the point where we can focus on individual enterprises, we'd be surprised at how well these enterprises are doing. So far, so good. But next week's another jam-packed one with way too many earnings reports to keep track of, except for if you're me. So let me give you some highlights. Monday starts with what many people expect to be a downer of a quarter, but I'm all over it looking for a reason to buy it. That's AT&T. Now, I'm thinking you might get a chance to buy this middling quality phone company, yes, you heard me, with a safe 5.5% yield once we scrutinize what's probably going to be bountiful cash flow that's coming from that Time Warner acquisition. We also hear from the one retailer that may disappoint because of Amazon. That's Walgreens Boots Alliance. It used to be also CVS, but I think CVS is now fine because they went and bought Aetna. Then Alphabet reports after the close. Now, you know what? I can't recall the last time Alphabet reported a clean, terrific quarter. It's always so confusing. And after the not-so-hot numbers we got from Twitter, I fear we might be in for another head-scratcher. What really matters now, though? I care about one thing only, an acceleration in Google's cloud business. Any sign that Alphabet's taking share from Microsoft's Azure, oh my, did they kill it? Or Amazon Web Services, believe me, it was better than all these naysayers said. Well, that would send this stock to all-time highs. That's what we need. Cloud. Oh, boy, here's one we're going to hear from Beyond Meat. The once hot faux burger stock that's recently gotten burned plummeting back to earth. I bet we'll be pleasantly surprised by the sales. But it won't matter because the lockup on insider sales is expected to come to an end on Tuesday. Once that day loser stock hits, you know what? I think that this company, $6 billion company, is going to have to be worth a lot less. Tuesday starts with MasterCard, symbol MA. Given how much Wall Street liked the numbers from PayPal, wow, to see that again, it went up, and Visa, I think MasterCard will be able to deliver a priceless quarter. Let's just hope for a pullback on Monday so you can get in the stock for Tuesday. Then there's Merck, which got hit this week after Bristol Myers told us about a successful oncological trial that might make them a tougher competitor to Merck. But when Merck reports, I actually expect to see something close to perfection, another buy ahead. Next, how much is General Motors really losing per day? Might as well listen to the call and find out. I remember a time when a strike at GM could send our whole economy reeling, maybe into a recession. Now it's a yawner. And we care more about Tesla's earnings, which were oddly better than expected. We also get results from Cramer fave Shopify, which helps small businesses set up an e-commerce presence. I bet it delivers a clean, solid beat. We've got it dispatched also from delivery guru Grubhub. Now, this is important. I don't think there's enough room for Grubhub, Uber Eats, DoorDash, and Postmates. These companies are bashing their heads against each other, which is why I predict pain. After the close, we hear from AMD. If Intel's doing as well, and we sure know it does, what a move today in that stock, that means, well, you should go buy some AMD. It was not up enough ahead of the quarter. We know Intel had a hard time meeting demand for all sorts of chips, including processors that are AMD's bread and butter. So, of course, data center. I am a big believer in CEO Lisa Su. So I recommend you buying some AMD next week, particularly if we get some sort of negative tweet or some sort of nonsense about being worried about the Fed. That's probably going to happen. If these numbers are good, then by the time Wednesday goes around, I expect to hear our commenters saying, you know what, Jim, this company did well, this company did well, this company did well, and all last week they did well. So you know what's going to happen? The Federal Reserve doesn't need to cut rates. That's garbage. We have enough industrials that are struggling, and we know the dollar's way too strong. A rate cut is exactly what we need to turn around the automakers and allow our exporters to compete fairly globally. If we get it, the market should roar again, and I do believe we will get it. Our rates are simply too high versus the rest of the world. Do not let any of these people, the pointy heads, tell you otherwise. Our Fed chief, Jerome Powell, secretly does know it. Maybe he comes out and says it's true. After the close, we have the most important particular element of earnings season because both Apple and Facebook report. Now, I can't stand it when Apple stock runs up into the quarter, and lately it's been on a wild gallop. I've been telling you to own Apple, don't trade it for years. I've been right. But if the stock's going to rally after the quarter, you know what? The company's going to have to do a series of things to make that happen. Raise numbers considerably. Talk about strong credit card adoption. That's that deal with Goldman. Give us hours upon hours of programming and break out the AirPods and Watch as separate businesses so we can see the big service stream. Tall order. I wouldn't be surprised if Apple actually falls short and the stock ends up pulling back to give you a better entry point. Hey, how about Facebook? Fortunately, the Mr. Zuckerberg goes to Washington phase is over, the one where he dutifully played the role of Pinata, and now we can get back to business. I'm expecting really good things here, especially about Instagram, which is why I like the stock ahead of the quarter. Chapel Trust owns this and Apple. Thursday morning, we hear from Bristol Myers. That's the one reinvigorated cancer immunotherapy drug that's merging with Celgene. It's a huge player in the oncological space. I think it's going to tell an excellent tale when it reports. While Bristol Myers has run this week, I recommended buy in any weakness. Went up to 55, too high. That's how confident I am about the pharmaceutical powerhouse that Cramer fave CEO Dr. Giovanni Caforio is putting together with this deal. I have championed it from when the stock was at 45 when they announced the Bristol-Celgene combo. A lot of people are fretting about Estee Lauder here. They're worried that this will be the quarter when CEO Fabrizio Freda's winning streak finally runs out and his company misses the numbers. After all, Estee Lauder's got a lot of exposure to Hong Kong and mainland China. But most of these doubters have never had the privilege of meeting Freda, a brilliant executive. He's figured out how to harness the smartphone, the camera portion of it, even like the 3 cameras in the new Apple phone, and social media, which make people feel like that they need to look beautiful every second of the day in case they get caught in a photo that appears on Snap or on Instagram. I think Estee Lauder transcends trade barriers, which is why I buy some both before and after the quarter's announced. How about Friday? We hear from the 2 best oil companies, Exxon and Chevron. I bet they'll show you that it really doesn't matter, though, what a fossil fuel producer says. Nobody cares. You need to recognize that the oil and gas category has become the new coal with the millennial money managers. The money managers, they just won't own these. Just watch how Wall Street reacts to these numbers. I think these stocks may be finished unless you're an income-seeking investor who believes that their yields are safe and doesn't mind that they won't be able to grow in a stagnant oil environment, which I suspect is actually going to last for years to come. Bottom line, listen, there are dozens of other companies that I didn't get to opine on here because we simply don't have the time. I wish more executives would be willing to spread out when they report dates, but I've been begging that for years and nothing's changed. Still, after the genuinely better than expected numbers we saw this week, I'm confident about next week. Even if the deluge of earnings reports means I won't be able to get, let's say, 1 wit of sleep next week. Instead, I'm going to grab a couple of naps in the green room. Herman in Texas. Herman!
Hi, Joe. How are you, Jim?
I am good, Herman. How about you?
Well, I'm fine. I'm calling about Twitter. It has been as high as 45, and then they reported terrible earnings, and it's down to 30 now. But it's part of the lexicon now. I mean, we use Twitter like we used to use Xerox as a name, and I was wondering if there's any a good entry point.
I thought it was tempting all day today, Herman. I really did. I said, okay, enough is enough. What hurt the stock more than anything else in the world was attitudinal. They sounded so down that you felt like, wow, I mean, maybe it's not as good. I think that you can start buying here, but they need a, let's say, a cheerleader in chief there because, wow, it was just so negative that even I, a big Twitter supporter, said, no way, no how. Marla in Mississippi. Marla.
Hi, Jim. First, thank you so much for diligently doing your homework to produce such a great show.
Thank you.
My question concerns shares of the bankrupt utilities company, PG&E.
Yeah.
The shares plummeted again today upon speculation its tower sparked another California wildfire. In light of the prospect of additional liability, do you think the company can successfully emerge from bankruptcy and be a good mad money investment, or is it too hot to touch?
I think too hot to touch, and it wouldn't be the common stock. I remember when Lilco had a problem with the old Long Island Lighting, and you had to buy all sorts of other pieces of paper other than the common stock. The common stock here just does not intrigue me. I'm sorry, but I like the concept, but it doesn't intrigue me. Let's go to Michael in Florida, please. Michael.
Hey, Mr. Cramer, how are you?
I am good, Michael. How about you?
I'm doing great. Thanks for taking my call.
Of course.
I'm calling about Bed Bath & Beyond today, BBBY. They're getting a new CEO. He takes over November 4th from Target.
Right.
I'm in the stock about $12, and it closed today at $14.27, down 5 cents or so. I'm up about 20%. Should I take profits?
No, you should not take profits. I've been working all week on trying to do a real good piece about this company and this stock and this executive and why this plan is going to work. I know it's very controversial, but I think that the activists have gotten the team together correctly. This is a stock that I don't want you selling. I think you could return to 18, 19, and that's when we will address whether it's time to take some profits. This week showed us what can happen when we finally get to focus on what real companies are doing rather than just the indices in the bond market. And next week could have the same fate. Oh, man, tonight, American Airlines is flying high after earnings today, but can its turbulent market and its Boeing problems make it so that it can get out of what some people think is a stock tailspin? We're going to sit down with the CEO. Then, are you buying what Honeywell is selling? I'm explaining why all's not well with Honeywell spinoffs. And Sally Krawcheck was one of the most influential people on Wall Street. I didn't say woman, but people. But now she's looking to help women break down the walls they face. I do not want you to miss my exclusive with the co-founder of Ellevest. I am telling you, you must watch it. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.